interact and help overall. So, the agenda for today is about the demand that's coming, how lenders are, winning with automation. I know automation is a very broad term, so I'll go a little bit deeper into that. And also the compliance and risk imperative that automation can solve for specifically. And then we'll end on some trends that we're seeing in the market to watch, both from an auto finance perspective and technology review. And I just want to thank Grace and AFSA for the opportunity. We really enjoy the partnership with AFSA and enjoy all the events that they put on for us and for us as members and us as consumers as well. So, first off is demand. So we've seen, the auto finance market at its peak, and we've seen it also the past few years. We do believe, and everything we're reading today and all the research we're doing, that we've got a lot of growth ahead of us. As a team, as a market, as how we consume, with an 8 to 12% growth coming up here soon. Expectations. How is the consumer and their expectations changing from what was expected 3-4 years ago, or even a year ago? They're looking for smarter, faster lending, easier processes, easier journeys to take in order to, of course, purchase the vehicle they want, get the proper product and the loan vehicle that they want, and get the best possible service that they have. And we also see that automation's imperative. We've seen that for several years now, where automation is no longer optional. It is critical to scale. It's critical to, bring a better journey to that customer, to that consumer that wants to get the new loan with everybody and get the new car driven quickly and fast outside of the finance office quickly. So, are we ready? I think that we're all getting ready. We all believe we could be ready, but there's a lot of things that we could do to better prepare ourselves for I think a very large surge coming in the market overall. So, automation and auto finance, the adoption wave, there's about 60% of top lenders, whether it be, top captives, banks, et cetera, that are currently adopting AI-driven initiatives for underwriting or, loan servicing to funding automation. Overall, we see that out there, that there's many different projects and initiatives happening. There's a lot of AI budget that has been designated and allocated as AI budget overall that's coming in from the finance teams that we have at our current clients. And then we also see the bad side of it. We see unfinished journeys. We see things that might start and stop quickly or get stuck in quicksand or mud and go back. So instead of it being a complete journey end to end, where the experience that the consumer gets from originating the loan to all the way to servicing the loan, it could be very different than what was originally forecasted on paper. So we do see a 98% of portals falling short and still falling into less than self-service area. So that happens quite a bit. Sometimes it happens because of legacy systems and platforms that might interact with or process and tools and people. And, we also want to make the experience good for the dealer as well. So the dealer experience is very important out there that we're seeing together as well. The automated loan lifecycle. When we're talking about a modern auto lending lender, what are they leveraging today to speed the process? Not only speed it, but making sure it's accurate, it's accountable, and the experience that the consumer receives is absolutely exceptional, which would drive NPS scores up and many different KPIs that we all track, in finance in general. NPS is an important one because it's customer satisfaction. But, if you look at kind of the loan life cycle today, you've got a digital application. A customer decides to move forward and decides to submit applications through any type of digital channel, whether they're applying, broadly or very narrowly over an application or a website or anything to get approved and move forward. From there, there could be AI underwriting. It could be algorithms already assessing the risk of said consumer credit worthiness, accuracy of the data they're providing. There could be different fraudulent checks along the way. Is this the correct person that's there? Are they truly who they are? Is there even further hits that they can do across multiple existing databases that helps with, speeding that loan faster, making sure it's accurate, making sure the person that is purchasing is accurate, making sure the dealer is doing everything that they need to do in order to fund that loan. And then, instant funding, how do we get to an instant funding state where loans are approved automatically, funding happens rapidly, the consumer is a much happier place, the dealer is getting, very quick time to funding, and very much it is getting away from erroneous paper checks and bottlenecks, or things that need to be followed up on, or steps that need to be collected, or corrections that need to be made. And then it moves into servicing, right? So you have smart servicing and automated servicing from a collections perspective, from optimizing customer engagement through the customer correspondence that needs to go out both legally from state to states or even federal out there. What is the loan life cycle? What are the adjustments that need to be made? How are you really smart servicing your customer with automation and the help of AI on top of it? That is really what we're seeing from a loan life cycle perspective. From you originate the loan all the way to they become a customer, and you serve how you servicing the loan and make sure that they want to do business with you again. Back to repeat customer satisfaction is always very important overall. So the automated loan life cycle comes into play heavily there, and then things that we're looking to achieve as a whole. And then how are lenders winning with automation? So there's several of our clients on here. One that we don't name, two that we see that are I think everybody knows their names. Which the first one, GM, has been streamlining their dealer services, making the automation enhancements they need to digitally contract things that they're doing with their clients, accelerate approvals, improving the entire dealership experience. That's more of a B2B use case that we have there, but it's flowing over to C as well, because in that scenario, the dealer is really being more efficient, and therefore that carries over to consumer. Westlake always has had a data-driven approach for analytics, automation, time to fund, cutting out lots of process that may or may not be needed, especially within indirect auto loans, and optimizing their risk portfolio because of the market that they serve. Very similar to we have a large subprime lender that expanding their credit access. So they use some AI-powered credit models and move faster and enable more accurate decisions for non-prime borrowers, which usually require a lot more information in order to get approved, which they were able to broaden their market while still managing risks. So we have a lot of other examples, but these are three we wanted to highlight today on this call, as I know some of them are very proud AFSA members as well, and how we're leading and winning together with automation. So overall. But it's a balance. So, we look at, I think all of us have had to call a call center and realize we're talking to a robot after a while, and we get frustrated because we can't actually get to a human because we're stuck in a robotic loop. And that has gotten even better over time with AI, because it does sound even further like you're talking to a human when you may not be, or stuck in a chatbot, or many different things that happen today with the AI interaction, and things that we can even do from our mobile. So the strategic balance needs to be out there on making sure a human and AI partnership really happen, because for long-term success, customers and consumers that we see, and then what we hear from our clients is that they still want a human experience, even though AI might have enhanced and sped that experience much more rapidly. So we see that heavily, and there's a strategic balance to have the human in the loop, with things, or especially if things, that the AI can't make proper directional decisions on it. So we see that human in the loop works really well. It's a strategic balance that comes in between, just going straight automation, or still having all humans process the things that we do today in auto finance. So always got to be balanced. I think we all learn that in life, and everything is better in balance. So very similar to what I talked about on the last slide. The 3 points we say is automation can speed and make things more efficient along many different routine tasks, and even ones that are difficult and more complex, and the workflow could be very, very long. They can really cut time off that. When you have the human touch, you get the judgment. You get the judgment in complex situations, and it's really imperative to have a human touch in the loop overall, because, again, they can see things much differently than what is spelled out on the model that was driven by the automation. So, and then trust and compliance. If you have both, builds confidence through that process even further to gain even further efficiencies overall. All right, and then when you have automation truly meet the human expertise, and that is really when the machine learning comes into play. So, after you have the human in a loop for periods of time, it actually can learn those items that a human might have to make a decision on and make them even more efficient. And that comes back into what we see, even daily. I mean, personalized support whenever you're calling or you're working with a different platform, and it's actually personalized to you. They know that you calling. They know your payment history. They know your background. They know that you've already been authenticated and you've already done everything you need to do from a security perspective. Having that personalized support is where automation meets human expertise, because the machine continues to learn, and when it learns, it gets better and more efficient over time. But having that human in the loop, like before, and striking that balance while it's learning, just makes the customer's journey even more efficient, or the dealer's journey. Both act similar. So again, automation meets human expertise. So how do we specifically help? How does Lightico specifically help? We have a product called Intelligent Document Processing, which automates end-to-end the processing of contract documents from originations all the way till it enters into your booking mechanism over to servicing. So how do we do that? It's a part of our overall orchestration platform. Like I said, we've been an AFSA member for, I think, 7 years now. We have a digital orchestration platform that encompasses everything from e-contracting to e-signature to doc collection, SNP collection, up to payments. That also encompasses intelligent document processing, the entire journey as well. So, and I'm focusing specifically on that piece of it because that is where our AI comes into play, on how we are actually capturing said document, classifying it, extracting data. We can enrich and compare it to any other database for a set of rules or a rule engine. It can be reviewed and validated, and then it can be consumed and processed by other said systems, whether it's a CRM system, your booking mechanism, your funding systems, even till it gets to the vaulting system. So very important that a lot of the data that we are capturing and extracting, we're taking that and structuring in a way that is being used for better business intelligence. So and also can push out to any other system that you might need. So if it's going back to the customer's card in Salesforce, or pushing to your systems that are online for how the deal is actually booked, how a dealer might get paid overall. But our orchestration platform really takes this into account, and this is really the process we follow with capturing, classifying, extraction, and then from there we're working on business rules, how we enrich, compare, validate, and consume and process the data. So taking raw data and making that raw data structured and into usable information for multiple systems to touch and teach. So, and then this is a longer workflow of the pattern, of how the steps actually would go through our system, with capturing, again, classifying, the data extraction, the enrichment, and the validation. So we have this pretty mapped out. And normally how we start, which I'll go over on the next slide, is training. We have to train the model to do this properly, and then it continues to learn over time. So then we do that through several different model pillars, I would say. So the first one is a generic model, which is designed to handle various document types. It's ideal for ad hoc scenarios or large scale documents that may or not change very often. So if you think of federal documents that hardly ever change, If you think of some that are state by state that are very similar but hardly ever change, that would be more of a generic model that we can train the system on, and it continuously works on it. And those generic models exist today for many, many different documents in our system. And then you have the common model. So this could be very specific to industry, such as auto finance. This product itself is out there in the mortgage industry. It's in the retail industry. It's in specifically for auto finance. There's a lot of common models. The retail installment contract, the lease agreements, the odometer statements, the various third parties that are out there could be a common model overall, and how we can gain high accuracy and efficiency, because we see those specific to industry, and we can replicate that over our customer lifespan. And then last but not least, the custom model, right? We do have clients asking us for very, very, very custom specific things for this product to use AI on documents, and very specific to them, very specific to that industry, which has a very high value to it because it's a specialized workflow that could be touching many different systems. And so we see that in the marketplace with several clients as well. So overall, that is our approach and our unique approach to that. And this is kind of an example of a lovely third party, which I know there's many out there, thousands and thousands and thousands. And this is an example of an extended tire and wheel agreement, and how we're extracting data to the right here, and how the system will classify it, will give it a confidence score. We believe that it's pulling the correct data off of there, and then it can compare all the items based upon the business rules that are suggested. And again, this is a human in the loop experience, because we first train the model with the humans giving us thumbs up, thumbs down. Did the system do its job? Did it catch the right information off of there? Did it catch the email address correctly? Is a signature missing or not? So a lot of the errors will get highlighted in the human in the loop to allow the system to ultimately get to a goal of straight through processing, where the system is thumbs upping and saying everything came back green, we're ready to go. You can go ahead and fund this deal, or you can go ahead and approve this document because the system has already done it. Or it could kick it back and say this needs to be looked at. Is this accurate? And then a human can override that. But the goal of our system is to get fully automated with the process that's in place today. So here is kind of an example, and some of the things you might hear in the market is OCR-based IDP. OCR is optical character recognition. Then you might hear generic AI models, which are LLMs. So you can hear that, and this is the difference between our product versus theirs, which a lot of things happen very rapidly. Can be done, many things done in real time. We take the approach of human in the loop training for the machine, and of course we build it live for our customer-facing flows. So when we build that workflow out, our goal is it's built in real time, and it's done in real time. All right, and this is some key KPIs that we see impacting in the market. So between the cost of saving per loan, auto loans differ than home loans, things of that nature, but we do see a very large savings in processing per loan package. It's time. Time is, if we don't have our time, what else do we have? So we were looking at 30-minute savings per review of loan package, and that could be big for auto funders, which there's many that have hundreds of people that we're very well aware of approving auto loans. Mortgage, there's thousands of people in certain banks and mortgage initiators, so tons of that. And then compliance, with tons. We look at compliance and confidence, we want to make sure that everything is done with major compliance. So instead of humans do make errors. We're not perfect. Machines don't work that way. So to reduce the error rates are heavy. And then, of course, scalable. Our solution is scalable. You can get three more loans per loan funding agent. On average, there's more. We're seeing savings even more there. So you can process more loans. You can book more loans faster. And again, it's a faster time to cash, which we all like. So we all like to get our cash faster. So again, this is a little bit more deeper, and I can make this deck available. I know we are recording this, but the training approach, the model of training to platform response time, our AI model, and this is a proven methodology. When we're receiving documents, in order to train, we need about 50 documents for a common model. 150 is the golden standard. So if we have 150 different documents, we can really train the system very well. And then, of course, platform response time, we're looking to get responses in 10 seconds or less, if not real time, depending on the process and the pattern that we're seeing. So that being said, how do we transform document processing, from human classifies each document to stare and compare to data is entered manually over to all three of those items are really corrected and solved for with an AI-driven product like intelligent document processing. So it classifies each document, it extracts it. It's fast, it's accurate, it's cost efficient, but it's also entering that information into another system. So you're correcting for two. You don't have to stare and compare anymore. You don't have to manually enter into another system. You're really working off of a fully end-to-end orchestrated system overall from IDP. From a compliance and risk perspective, the fraud detection, is high. So how can we reduce that? And we know that comes in rapidly. We've got lots of examples in auto finance of fraud. There's a lot of tools out there to use, but when you're trying to detect fraud in real time, that is a part of our platform and capability. Automating the compliance portion of it. When we have the business risk and rules outlined, and that really takes that compliance piece down because there is no human making a mistake. And of course, reporting and dynamic monitoring. So when you get the analytics on the items that are happening, and you can dive directly into the deal package to see where the automation picked up and what it caught. A lot of analytics around that, which could help you learn more about maybe different markets that are you're seeing more compliance issues in or more fraudulent issues in, so that can be flagged further, maybe require further review for certain markets because the system's catching that overall. So, and then preparing for what we see in the future. So we hear a lot about AI there and how what agentic AI could bring to the table. We see that processing could redefine how the loan origination and servicing could happen. Overall, we've talked a lot about that. API first ecosystems. So instead of having multiple different systems to operate from dealer portals to OEMs to many different things that are out there, you have really an API first ecosystem in a marketplace to choose from to architect the platform that you would like to get the journey done more rapidly. So instead of it being legacy standalone systems, one ecosystem, and you can have APIs run the orchestration through those systems to help that origination process be very short compared to long. And then if we ever get there, usage-based financing, which is a topic that I continue to read about, and I don't know how that would operate in a flexible based pattern for AutoFi, but it could be interesting in the future. So preparing for those future trends and key automation trends are something to watch, something to get excited about overall. But other than that, one thing I would leave you guys with is how do you accelerate your automation journey? One, assess your current state. I think looking at what is the journey today. What is the left turns, the right turns, the hills, the valleys, and the obstacles that a customer needs to get over to fund a loan, or what does an agent need to get over, or what does a dealer need to get over, and really have that really outlined. Prioritize high impact areas. There are lots of ways to make the journey more efficient, but what's the most high prioritized area in order to do so? So is it from the start? Is it in the middle? If you look at the areas that are most high impact, those are the ones you might want to look at first. And then build it for agility. Build it for being agile and continuous learning because it will be a continuous learning process, even with AI. Things change. Lots of things change. The market changes, the climate changes, and we have to stay on top of regulatory changes as well. So build it to be agile and to be able to adapt and adopt new things that happen in the marketplace. And of course, back to the human in the loop, still balance technology and still touch, because I do believe when you think about moments that matter in people's lives, sometimes a first car is something people always remember. I remember my first car and the process of doing it, but I think I stayed in the dealership for 8 hours at that time, and that was a very long time ago. So think of the balance of human to technology, which is something we highly recommend and we see as a technology partner out there, and really look at is make sure that the moments that you're in are mattering for that customer and that consumer. So, and like I said, the surge is it's here. We're seeing it. AI is everywhere, automation's everywhere. We see leaders out there taking the proper steps to do it. We see others that are having struggles with it. I would just embrace it. Embrace it. It's here. It's happening. How do you adapt to it, and how do you implement it overall? Because consumers are asking for it. The next round of buyers. I look at my children. They would rather text me than call me any day. And I think that we're living in that area of true automation, where things can be done, things can be purchased, loans can be funded, all from your mobile device, and being able to do it more intelligently. So if I leave you with anything, please embrace automation and embrace AI, because it's here and it's happening. So that's all I had. If there's any questions, I'm happy to take any. I think we have to use the chat portion for questions, but happy to take any questions if need be. If not, Grace, I don't know if you're on, if you see any questions, but I just want to thank you for your time today as well. And if you have any questions, my contact information can be supplied to. Questions? All right.
All right. Thank you, Jeff, and thank you everyone for attending our webinar. We hope you have a great rest of your day. And just a reminder that the webinar recording will be available on our webinar page next week. Thank you guys so much.
Thank you, everyone. Have a great Thanksgiving.